Welcome to RANsquawk's e-morning briefing for Thursday the 28th of May 2009. Just gone through half 8 now in London and just taking a look where the markets stand. At the moment, much of the attention has been based on US Treasuries and the yield curve this morning, as following the big sell-off we saw late in the session yesterday in the US, which did see Treasuries close down over a full point in the pit yesterday. Again, we did see 10-year yields hitting a 6-month high there. Market chatter as well pointed to mortgage-related selling in that move, helping exacerbate the size. And again, that's coming in spite of the 2- and 5-year auctions we've seen, relatively decent, although still a lot of fears lingering in terms of this increased supply coming out of the US. And we'll be looking ahead to the 7-year note, which we'll see auction later on today. We have indeed as well seen, in particular, a lot of press articles talking about the yields in the US. In particular, the FT's Lex column, they point out that the yields on the 30-year Fannie Mae mortgage bonds, they did leap some 45 basis points yesterday, again in tandem with the jump up in the 10-year yield, and that reached 4.7%. That, of course, posing much of a problem there to one of the biggest, or the GSEs, in providing mortgages to the US, having to look for green shoots and people providing mortgages. Obviously, that's going to be a real problem if these GSE debts, Fannie Mae and Freddie Mac, keep increasing at the rate they have been, such as in yesterday's session. Elsewhere as well, we also saw those mortgage apps, they did indeed fall some 14% yesterday. Taking a look at some of the other headlines though that have gained a little bit of attention this morning. A piece coming out saying the Fed may need to step up its asset purchases to prevent its balance sheet from contracting until policymakers are convinced that there will be a solid economic recovery. And elsewhere, more to do with the stock side of things, the Wall Street Journal reporting this morning that the FDIC's legacy loan program to buy banks' debt is failing to gain any real support from lenders and may soon be put on hold, according to the journal, citing its own internal sources. Prospects of buyers and sellers have been reluctant amid FDIC rules will change, and also that some banks have started to become profitable again, and in terms of their finances stabilising. Elsewhere, just to give you an update in terms of the geopolitical situation in North Korea, they look certain to face further UN sanctions this week after nuclear tests, and South Korea have raised their military alert level for the peninsula. And then just looking ahead now in terms of the other things we're keeping an eye on, the yen has been a big mover in the FX markets, seeing weakening across the board. A broad spectrum of sellers has been touted from pension funds and PRDC players. Indeed, much of the moves coming as massive rehedgings take place in terms of their positions after the jump in yields yesterday. So looking ahead for the calendar, we're going to be looking at the top of the hour for the German jobless numbers, and then that will take us on to the retail PMIs and then the confidence numbers out of the Eurozone at 9 and 10 o'clock respectively. From the US today is quite a busy schedule. We'll be looking for the durable goods reports alongside initial jobless continuing claims, and then we'll look to see if new home sales can follow existing home sales yesterday and show some further increases for the month of April. Other than that, due to the Memorial Day holiday on Monday, we'll be looking out for the DOE all inventory numbers later on this afternoon. Analysts are expecting a build of just a small 50,000 in terms of the crude levels. And then also, on a similar note to that, we'll also be looking out for the OPEC meeting to commence later on this afternoon, where most analysts are predicting the cartel to keep output on hold for the time being, looking to let the economic bounce push up prices. Other than that, auction-wise, we'll be looking out for Italian BTPs, quite a large chunk, around 8 billion euros worth to come in. That'll be about 10 o'clock this morning, so around an hour and a half's time. Other than that, we'll see a index-linked 2032 gilt. That'll be at 10:30 bids in, and then the 7-year note that is due at 6 o'clock this evening London time.